Hello, ladies and gentlemen, and welcome back to the newest edition of Levelytics on Video. I am your host, Jordan, and if you don't know me by Jordan, I also go by Permable Nino in the Twitter sphere. For the subscribers, welcome back. For the new folk that are watching this content for the first time, welcome to the channel. And what we do here is we just talk crypto markets and go through some data, go through price charts, and talk about strategy. And I go through how the Levelytics portfolio is performing versus BTC and altcoins over time. And for a little bit of context, Levelytics started in October 2025. So it basically marked the Pico top before crypto just went off a cliff and the rest of the financial world went on a generational run. So, what we are going to do here is start by talking about the Bitcoin price chart, right? And for those of you who have seen a lot of the content, you already kind of know what what the layout is here and what my expectations have been. But as always, we're going to go through every piece of content, in full each week. And let's talk about the price chart, right? So for a long time, I've been talking about how 75K to 80K has been just the price to beat. This is the big line in the sand where we wanted to see if bulls really had it in them that they could push price through it and move price up to the 100K level. And like I said, this is the big line in the sand. This is going to be the difficult wall to break, and it's proven to be that. And, a week ago, we're kind of within it, trading within the 75K to 80K range, right around here, and we have fully broken down now. And I think it's fair to say that this is a clean rejection from the bear's first wall. And to tell you the truth, I don't really have a good idea of where price bottoms from here. And since the previous recording, I actually cut all of my BTC positioning in the Levelytics portfolio. And simply because, I was kind of just holding on to this despite the fact that, we had some red bearish momentum prints. And if you're not used to, if this is your first time seeing the videos as well, the red candles are my trading system, and the red candles indicate that it's bearish momentum and blue candles indicate bullish momentum, right? So at the highs around 80K, which is where I got a little too bullish, I jumped into meme coins, took on high volatility assets. I paid the price for that when the price dumped a little bit. But after that, I learned my lesson, right? I cut the meme coins and I cut Bitcoin. At this point in time, Bitcoin's trading around 70K, 71K. I really could not tell you where this thing's going to bottom. It just does not look good. It's kind of felt like annoying slow bleed. Hasn't felt like there's been anything obvious or decisive in terms of price action. Where people panic. Saylor announced that he sold like 32 BTC or something like that. I think over the past week or something like that. I'm not really sure what to make of those type of headlines, to tell you the truth, but I think it's not I think it's not the best signal to the market that this guy who owns way too much of the supply is indicating to people that he's going to sell. And I think for that reason, Bitcoin's just been trading super limp, despite the fact that some altcoins have stood out and actually made runs for it. And I think there's just like a weird distaste for people. I think you can even see it on Twitter too. People are just like, Saylor kind of poisoned the well a little bit when it comes to crypto. DATs were kind of just like a horrible fad that just brought in a lot of toxic capital into the crypto space, particularly Bitcoin. So I think there's just still a lot of recovery going on. I obviously it's really hard to gauge what amount of damage is done to the market from all of these activities, but it just shows in the price action, right? I mean, this is starting to look like we're going to be ranging for a while. And what I think the goal moving forward is, right, like I said in this right here, weekly close below 70K lookout. Like, I really don't want to see price go much lower than where we are right now, to tell you the truth. Like I said, I don't really know where this bottoms because I'm not much of a bottom ticker when it comes to trading. I'd rather just buy strength and move from there and top blast and just hope the price just keeps going. But what you really want, if you're a very, very hopeful bull and you're still holding on to your BTC position, right, if you're a trader, is that, the beginning of this rally started at 65K, right, and it went up to 82K. You want some sort of bottom before it gets to 65K, right? That way you can put in a higher low maybe and then go for it. It would make sense, like I said, because this was a difficult level of resistance that maybe we wouldn't break it the first time. And maybe you had to dishearten people and send the price lower during that rejection period to squeeze people out, because like in a lot of different manners, you want time-based capitulation, not just violent price moves downwards, right? But we are kind of getting awfully close to running out of wiggle room here. This does not look super great. And, the problem is that you have a deviation pattern possibly where you break out above the 75K level, right? Get above it and then break back into the range and you start testing. This is why also I don't really like going below 70K or even getting close to retesting the 65K breakout, is that you have a range deviation to the top here, and then obviously you're gonna probably get one down here, and who knows how low that goes. And the problem is when you get a move like this means that the amount of time that is going to be taken to accumulate and price to go sideways and for time for the market to recover over time is going to be long. Like it's going to take until possibly the end of the year, if you get a move down like this, right? At this point, you hang up, like I've said this before in other videos, you hang up the cleats probably for crypto, and maybe you do some trading, but it's just going to be a long, boring 2026 for the crypto markets. And not that 2025 was particularly great either. So this is just something to keep in mind. I don't want to be too fear-mongery, but I think this really does not look good for Bitcoin right now. And I really don't have a good gauge for where price bottoms from here. And I think, one thing if you want to do is let's look at the weekly time frame for Bitcoin. You could argue 72, 73K is an area you want to see recovered by the end of the week. So maybe a little bit of an overshoot, but you get a clean close below this and at the 70K level, going into Sunday, I think you're just kind of nervous for BTC, to tell you the truth. And, we'll have to just wait and see what happens from there. And it's just really weird because, in the context of all of this, you got charts like Hyperliquid, which is just like up only. Look at this thing. I mean, this is up only. And you have other charts like this too. Hold on, let's go to... And these are all, fortunately positions that the Levellytics book has been holding, but Near has been on a tear. It's up, 14% today. Near BTC looks good. I mean, it's still printing blues. This is exactly what you want to see. Blueprints is easy bullish price action. Hold through all of it. Wait for a red print and get out. But yeah, I think the only one that's kind of slowing down a little bit in the Levellytics portfolio is Zcash. It's about to have a red daily print today on the USD pair. On the BTC pair, I think it's still printing blue. I need to decide at the end of the day if I'm going to cut anything on this red USD print or if I'm going to wait for a red BTC print, Zcash BTC pair print. And if that happens, maybe I probably will just cut a chunk of it just to be safe. Can always buy back. That's one thing that I've learned over time from managing the Levellytics book. Is I used to be pretty shy and worried about my ability to get back into a position if something goes against me and the price moves and I happen to sell the bottom. You just kind of move on. That's what the whole point of having a system is. You just trust yourself that you'll be able to get back in and that you have a well-designed system. And this is why, like I always told you guys in other videos, that you don't want to have a system that requires you to be too discretionary, right? Like I built this to just, blue and red, right? Like buy blue, sell red. That's very easy stuff that I can do. I don't have to overthink it. And, if price goes against me, so be it. And, you just have to trust the system and understand what you've built into the system. But yeah, this doesn't look particularly great. So now let's go over to traditional markets because, there's, you ask yourself the question, okay, so BTC feels kind of like toxic right now. In terms of the, not only the vibe around BTC, but I think just the sailor selling, I think people still are pretty salty about whatever's gone on with the DATs. And it's just trading like crap, basically, right? But does that mean the rest of crypto-related investments are dead? And the reality is no. I mean, this is BitQ divided by, BitQ is an ETF that holds equities that build crypto products, right? And since April 2025, which was when Trump did the whole tariff thing or whatever and the market bottomed, the price is up 200% versus Bitcoin since then. And it's up 4% against BTC today. And you can just see it's just basically up only. So there are places, there's obviously interest in investing from people that, on Main Street, on, Wall Street or whatever, like people that are in traditional markets are still buying into some of this stuff. And there's just demand, and the fact that the prices, BitQ, crypto equities that perform pretty well just tells you that not necessarily everything that's related to crypto or Bitcoin is necessarily toxic. So there are pockets where you can make money and you don't have to go into, if you miss the AI move, you can also still, if crypto is like your comfort zone, you can still trade crypto. You just have to pick the right pockets to do it in. Right, it just has been just pure pain for BTC and most of altcoins for a while. But if you want to play a little easier game, you can also just trade crypto equities. Unfortunately, in the Levellytics portfolio, we do not, on the exchange that we use, we do not have access to crypto equities. So it is pure cryptocurrency or DeFi asset price action, basically, for the Levelytics portfolio. So, unfortunately, that's not reflected in the returns or any of our holdings that we get access to this. But I just wanted to show you guys this chart because, yeah, you can invest in crypto related stuff and it's not necessarily going to perform poorly. It just happens to be that, BTC right now is not doing well. Okay, so let's move on to the next chart. And this chart shows the 90-day moving average ratio for all perpetual swap pairs on Binance. And a ratio of 1, as you can see, means that the price is equal to the 90-day moving average, right? And obviously, when you get the price above the 90-day moving average, it's a decent signal that there's a significant amount of strength in the market, right? Because like 90 days is like it's not too short term. It's like a medium term time frame, right? And for crypto, that's considered borderline long term, to tell you the truth. And in a lot of different occasions, you have situations where the price breaks above the 90-day moving average, right? You get it here, and it breaks down right before the big run up in 2020, at the end of 2020, right? So every time you get it, and it happens over and over again. I'm not going to insult y'all's intelligence, but you get other situations where it peaks above it. For example, in April 2022 or March 2022, right here, before the price rolled over, you get a little move above it, and then it just starts breaking down below it, right? And then you also got it here, August 2022, another top, back below it, right? So you'll get these situations where it can fake out to the downside, right? So right now, we're trying to figure out what exactly is going on in the market. Basically, this is like the line in the sand. This is like one example of what you could consider the final line in the sand for altcoins along with BTC. Like I said, the reason why I built this chart, not built it, I've had this chart on dudeterminal.com, which is my analytics website. But the main reason why I have this chart in this article is because, like I said in the BTC chart, I have a difficult time looking at the Bitcoin chart, like I said, hold on one second, identifying where this thing should bottom. I just have like those basic general ideas I told you about. I'm like, weekly close below 70K, don't love it. But, looking at the 90-day moving average ratio for altcoins, right, you want to hold this one level. Usually when it breaks back below it after, peaking out above it, if you get a convincing move below this, then it's probably going to be another convincing leg down, right? I think there'll be some sort of emphatic move downwards because, for the most part, price action since February has been pretty tame. There's not been any violence. It's just been kind of grinding its way up, and it broke back above the 90-day moving average for most of these altcoin pairs, and now we're retesting, right? So retesting, you could argue in some instances is a bullish retest because you broke above it and we're going back to it. But as we all know, if Bitcoin is not feeling it, it's not going to matter. Like, this does not matter at all, and you'll probably end up with one of these instances where you get a breakout, like in March, April 2022, and then August 2022, where you get a move up, you get excited about it, and then everything just rolls over. So it remains to be seen. But this is a level, we're at the level where we need to be watching and paying attention. Everything is starting to, the water is starting to boil a little bit, and the bulls are kind of trying to hold serve here, is what I wrote in the article, right? You're trying to fend off the bears and defend this level and get a bounce after what has been a very brutal downtrend and effectively a bear market since the U.S. election in December 2024, which is this next chart, right? I hope you guys can see this, but this shows the consecutive days that you don't have a market-wide rally. And the way I'm calculating a market-wide rally is having more than 50% of pairs on Bybit breaking to new 90-day highs. And that has not happened. You've not had a lot of assets breaking to new 90-day highs in 530 days, basically, right? And this little line up started at the end of 2025, right here, November 2024, December 2024, which is, as we all know, the U.S. presidential election. The last time we had a buildup this high, and I've talked about this in other articles, was January 2023, where BTC bear market bottomed. So in some capacity, you can look at this chart and think, oh, it's as long as the last bear market. This market is very, very oversold, and there's been no relief rallies along the way. You can also look at it like this has been a disgusting bear market. It was even worse than the last bear market. And you can understand why crypto sentiment has been so bad and why this rejection for BTC has been so bad and why everyone's just starting to rotate out of crypto to trade other asset classes, right? Who wants to deal with this? This is brutal. And I think over time, it probably has flushed a lot of people out. There are those of us who have been around the crypto markets for a long time. It used to kind of be like an up only asset class, to some extent. Like the bear markets would be crappy, but you'd rip the band-aid off. This is a year and a half of not a single bounce basically from altcoins, right? And it's still going. And like I said, there's a handful of assets that are standing out right now, like Zcash, Near, Hype, that are making moves for it. But the rest of the asset class is just basically dead capital sitting in assets that are not performing well. And that's not it. That's kind of an issue for bottoming the market and improving sentiment. If everything is just sitting around still waiting for BTC to make a move, but the problem with BTC is that it's kind of just trading like crap. And you got this bad news headline after hitting 80K, where Saylor starts announcing that he's probably going to make some sales this year of BTC. And yeah, it's just a lot of bad news adding up slowly. And I think, you want to see the price bottom here, or otherwise we're in for some damage on this chart. And this could just continue. And the problem also with crypto is that crypto is an incredibly reflexive asset class, right? The longer this goes on, the longer it will continue to go on, basically. People will continue to expect this. People will rotate capital out of crypto, and once that money leaves, crypto is actually kind of a sticky asset class when it comes to capital. When people bring their money in, it usually stays for a long time. However, that also means that if people actually capitulate and pull their money out of the market, that means they're probably not coming back. And there are plenty of people that have rage quit crypto back in the day, and they quit way before it ever got this bad. So yeah, this isn't a good combination of horrible continued bad sentiment in the crypto markets while the rest of the world is just ripping to new all-time highs, right? BTC is flailing, fighting for its life here. It just looks pretty suspect, right? So this is just like not a good combination, which is why it makes me nervous that this retest of the 90-day moving average ratio might break down. However, it is also possibly the period of maximum opportunity is the other way to view it, right? You have an overly extended, basically the longest bear market for altcoins in the history of crypto. Yeah, I got into crypto in 2016. This is by far the worst bear market for altcoins we've ever had. It's not even close. And yeah, so the worst, longest lasting bear market, right? A year and a half of nothing but down only, on top of the fact that we broke above the 90-day moving average for the first time since October 2025, which was a huge deleveraging event, right? And we're retesting, right? So this is possibly the point of maximum opportunity. If you thought that you missed out on the moves when the prices broke up, kind of just went up only through the 90-day moving average to 1.2. So this is possibly your chance. That's another way to look at it too, right? There's no point to be overly doom and gloom. You just need to have your own system, right? Like I have with mine, buy blue, sell red, right? Just have your system and then start firing. And that's kind of what I've been doing with the Levalytics portfolio. But yeah, it doesn't look great, but you could be viewing this as the point of maximum opportunity. Okay, this is one chart that mildly has me excited or concerned, right? So the red lines here, it shows the percentage of perpetual swap pairs on Bybit that have an oversold RSI reading, right? So spike upwards means that there's a lot of assets that are oversold, right? Like for example, on February 5th, February 6th, right? Big oversold reading. And the green line down here shows the 7-day returns for altcoins on average, right? So ideally, the best time to buy the dip are when returns are really in the gutter, like minus 15% or worse, and then you have a large oversold reading, right? That just tells you that there's like some sort of capitulatory type print going on, and you get bounces along the way. Like you can get it like September 25th. Yeah, September 26th, 25th, right around here. You got a little bounce, boom. You got this one on October 10th. Price went sideways for a while at least. November 3rd. Yeah, you got a little bounce out of it there, but not much before it rugged. But yeah, you get it over and over again. But you can see how high these value prints were, right? Between 60% to 90%, right? These are large prints. This is a large percentage of assets that are oversold, right? And then you got the big old one at 80% on February 5th, right? Just to kind of finish things off. Since then, it's been very tame, right? You've had a couple sell-offs here and there, but it's not a large percentage of assets that are printing oversold. And the 7-day returns for altcoins haven't been that bad either when these instances have occurred. Not even worse than a minus I guess you got minus 12% here on May 16th, right? When price initially dropped off a cliff. Not off a cliff, but from the top, right? Uh, you're getting these prints, but they're not very large. Part of this signals to me that there's either a lot of strength in the altcoin market because it's so oversold, it's been going on for so long, everything is retesting the 90-day moving average, and that is a reason to be constructive and that people are not panicking, right? That is the bullish side of it. And the problem is that whenever I do analysis, I have a tendency to be overly optimistic about analyzing the market. So I'm trying to make sure that when I give you guys these takes moving forward, that I'm giving also possibly the most bearish scenario as well, right? The bear side of this is usually that, you don't have many huge oversold prints since February, which is 4 months, right? That's possibly a reason to think that we are overdue a very large sell-off print where there's just a nasty candle downwards and you get a like 60, at least 60% print. And that means BTC needs to sell off more. That is the other side of it. I'm not completely sure which way I'm swinging at the moment. I'm still kind of playing this market tactically. And I think at a high level, I do think that there is reason to believe that the strong assets that are outperforming do have the capability, and there's a possibility that they can continue to run without BTC playing ball. And I think it's just because there's a lot of assets, like I said, that there's a lot of money sitting in dead assets for the most part. And that's a source of money. And there's also, whenever these hot assets get on the scene, the ability to create on-ramps for people to be able to buy these assets they're built faster than they used to be. So those are two sources of capital, right? And then the other thing, right, there's two large sources of capital that can squeeze into these assets. And then the other thing is that there's not that many quality assets. So when you have a decent chunk of money that can be rotated or newly entered into an asset or a market, and you also have not very few quality assets, it's like squeezing into a very tight hallway, right? So there's not a lot of room for basically the price will get squeezed higher just because there's just not much room to buy that many assets, but there's a lot more money available. So that's something to keep in mind and watch moving forward. And I think that's why some of the moves on some of these stronger coins have been so violent. And I think it might be the prevailing theme moving forward that, quality is just going to get bid up really quick just because there's a lot of people that hate these old coins that just don't do anything. And then, like I said, the ability to raise capital is better than ever in the crypto space, or be able to get these coins access to liquidity is better than it's ever been. And, when there's a will, there's a way. And that's basically what happens. So yeah, that's kind of like my strategy moving forward, right? So even if this does happen, I'm just going to play my system as it is, right? I'm going to buy blue, sell red. And I do think that despite everything that's going on, even if we do get a large print down here, you still have a possibility where you can still trade some of these assets and they'll just trade to their own rhythm. They'll march to the beat of their own drum, but that remains to be seen. But yes, this has me mildly paranoid that you just do not have many panicky prints on the percentage of assets with an oversold RSI, right? It's just, it looks very indifferent. Nobody's really scared. People might be getting a little too comfy. And that's where always in crypto you get the big rug, right? So we have to kind of just wait and see what happens. And I kind of wish, to tell you the truth, like this is kind of one of those moments where, we got a print on May 28th. I kind of wish you just get a big print on May 28th, right? Because then you get that. It's like, okay, there's some sort of panic in the market. That's a good signal that there's been emotion created and a possibility for the prices to put in a bottom, right? But when you get these small prints, lots of indifference, not much damage being done on the percentage returns on any of these assets, it just makes me a tad nervous that, the downside might be actually hasn't even started yet, right? You want to see that there's people getting nervous early rather than late. But yeah, so we'll wait and see what happens with that. And then, for the rest of the article, I kind of just focus on where I'm considering allocating my capital, right? This theme that the best stuff is actually just going to continue to outperform, and it might outperform more than it's ever done just because of the reasons that I gave you guys, right? And I would say that that's on an individual asset basis, but on a sector basis, right, you have basically, I wouldn't invest in any sector like as a whole in crypto outside of AI. And it's because look at this pink line. The pink line is the AI sector. It's just, this is just a zoomed in view of, since the beginning of the year, right? Year to date. Just AI is always the best performing. It's just been like this for actually a couple years now. And I think that people need to, when it comes to investing, you need to think about where you actually care about trading. What assets do you want to pay attention to? What are you going to put on your watch list, right? The rest of these assets, like the rest of these sectors, privacy, memes, OG DeFi, popular DeFi, they just don't do that well as a whole sector. And maybe you can still pay attention to the individual assets within the sector. For example, Hyperliquid is within the popular DeFi index sector, which is down 9% over the past 90 days, right? So you can find individual assets within these sectors and scope them out and get long. But I'd say as a whole, as a sector, paying attention the most closely to any of them is AI, just because AI performs pretty well. You've got coins like Venice, you've got coins like Fetch AI, which is doing pretty well. You got WorldCoin that's doing pretty well. You got BitTensor, which has done decently over the past couple of months. There's just a handful of assets that are just doing better than the rest of the market is. And that's just something that we need to pay attention to. And that's where I make sure that when I'm basically tracking indices against each other and their performance is a good way to just tell yourself at a high level, like, what should I be paying attention to? Where should I be looking to hammer on the momentum that's been created within a certain sector, right? So, like I said, for the time being, my sights remain focused in terms of a sector on AI. And like I said, I pay attention to the individual asset plays as well, which is what I've done, in the case of Zcash, which is a privacy coin, Near, which is like kind of a bit of everything, kind of like a combo play with Zcash a little bit. And Hyperliquid, which is also, popular new DeFi sector, right? So you just need to pay attention to the individual assets. But in terms of the sector, this is the one to pay attention to. It always performs the best, and it's your best opportunity. If you think that market conditions are starting to become favorable or more favorable, this is where you need to start firing. This is what I'm doing. And obviously, as always, none of this is financial advice, but it's just ways. I'm trying to give you guys frameworks and ways to just really facilitate making easy, good decisions in the market. And not spreading yourselves too thin when it comes time to make decisions. But yeah, this is by far the best sector. Just pay attention to AI. And then here is an example of one outperforming asset. The pink line is Hyperliquid's 90-day performance, which is it's up around 128% in the past 90 days. And then if you look at the mean return, what's going on here? Like 10%? No, BTC is up 10%. Why is this number different? Hold on one second. Why does it say -9 and this one says 9? Must be an off calculation here. But nonetheless, though, you can just see that Hyperliquid is just disgustingly outperforming the market, right? And it's just trading head and shoulders above everything else. And you need to pay attention to these assets. And like I said, I just think there is an increased probability that these high quality assets are just going to attract more and more capital, because there's actually going to be capital rotating out of some of these other assets. I think in previous bear markets, people would just hold on to their bags, be like, next cycle it'll bounce back and I'll sell it then. I think in crypto now, I think people are starting to come to grips with reality that that's just not the case. There's no guarantee that happens. And that's why some of these assets like Hyperliquid are just probably getting jammed with capital right now. Because, it's like a very successful project. It makes a lot of money. It's just a new, shiny, exciting thing. It hasn't really been through a full market cycle. That also helps. So these type of things that are like starting to show product market fit, which is a very rare thing in crypto, right? You don't really get a whole lot of that, especially on a business front when it comes to like generating cash flows. This stands out. I mean, like I said, there's just a lot of potential capital that could rotate from within crypto, and there's the ability to create on-ramps better than ever for crypto assets that people like, and it happens at a breakneck pace. And that's kind of what's going on in hype in general, right? So these assets, you need to not just watch on the sidelines. You need to pay attention to them, and I think that they have a possibility to make people feel really bad about not allocating, and I think they can go way higher than people expect just because of the conditions that I told you about. There's just not much to pick from, and there's a lot of capital that can be rotated into them. But yeah, so this looks good. So Here's a look at the portfolio, though, right? So the portfolio is now 31% cash, right? And then the rest of it is in altcoins: Hype, Zcash, Near, Virtual, and Fetch. Um, got the AI little play right here, like 12 to 13% of the book, then Near, Zcash, and Hype. And yeah, I think basically the construction moving forward that I talked about this in the newsletter is that I'm not really, I think the dominant way to trade your portfolio moving forward is own these outliers where you think people are going to start jamming capital into, and the price action is reflective of that. Um, and then hold a chunk of cash. That way you get access to higher risk, higher volatility plays where you think the price can really run away, but you also have cash in the event that you are wrong and it just doesn't destroy your portfolio, right? Especially when you have this overhang of BTC just trading weird. You kind of need BTC to show some strength because the problem is that with some of these stronger asset plays, right? If you get a bounce from BTC, they're going to just run even harder, right? And then they're going to run out. It's over. The good news is though is that the rest of the altcoin market will wake up if that happens. And in that case, if that happens as well, you might get some new updated runners, right? When you have if I have 31% cash, I'm ready to deploy. So it's like kind of a win-win, right? Where I'm owning the winners, they're still running despite BTC trading a bit weird. And then I have cash, if something goes wrong or if the market goes right, and I can start buying more into momentum with more information and the ability to with a better risk reward basically at that point. And I've talked to you guys about this before. I'll go here. Let's do this. My favorites. Sorry, the page has to load a little bit. Let's do this. Hold on. Yeah, so let's refresh the Coinbase Premium chart. Okay, it says it's refreshed. Zoom this in. June 1st. Okay, cool. Right. You can see red candles are when the Coinbase when assets on Coinbase are trading at a discount versus the same asset trading on Binance, and then blue is a Coinbase Premium, right? If you get a move back up to this 82K level, like I said, and you start getting this premium climbing, I think it is a moment where I'm going to step on the gas with this 32% cash allocation, right? That's going to be a moment where I'm like, okay, I have more information. I'm feeling really bullish. Coinbase Premium is flipping positive. I assume funding rates will start flipping more positive again. And I think it'll be a moment where everyone's very obviously risk on at that point, right? Unfortunately, in the moment, right, like we said, things just are not super obvious right now. There's a few assets that are trading particularly well. But the rest of the crypto market, it's just waiting for BTC to see if it's going to rug or not. Nobody really knows what's going on. So that is a reason why you hold on to some cash, right? You wait for a little bit more information. I'm, considering all the assets I'm holding have done particularly well. I feel pretty good about that. But this is an example for why you hold on to some cash. And that's a strategy that I have in mind that I've already thought about before. That if that happens, we get to revisit this 82K level. I think it'll probably be paired with the Coinbase Premium and you get a mega pump. So yeah, that's another reason to hold some cash for me in the portfolio. And then otherwise, let's look at the performance of the Levellytics book. So the Levellytics book is down 18.45% since it started in October 2025. BTC is down 39.73%. Altcoins that I've traded are down 63.48%. And 22.71% is the amount of money that the Levellytics book needs to make to get back to break even. And it's, you can see there's divergence, right? I don't want to hover over it too much because it shows the names are going to start covering everything. But yeah, this is looking good. You can see BTC is the green line, which is going down, and the blue line is the Levellytics performance, and it's going up. So things are looking good. The strategy is working. And like I said, I'm going to probably continue to play this until at least BTC gets a revisit of like the 80K level. And if BTC bounces here and goes back up to 80K, I'm a happy buyer there. I think a lot more people would be happy buyers there because you just have a lot more information. You're like, okay, well, there was obviously some sort of demand back at 70K, despite the fact that it was such a slow, drawn out drawdown. I feel pretty good about buying there. So, yeah. So, like I said, the strategy is working. I'm going to continue to keep hammering the strategy. And, yeah, guys, things are pretty dicey right now. So, like I said, sufficient reason to hold on to some cash, but I'm still comfortable enough to own the leaders. And they have not, the price action for all of them does not go against my system. Like I said, hold on 1 second. Let me share. Where's Hype? Like I said, Hype is blue candles, right? So I'm not going against my system to make these decisions either. So everything is simple and handled, and it's all going according to the way I want it to go. And the second I start getting uncomfortable or start breaking my own rules too much is the time where I probably should start taking more money off the table. But the good news is, like I said, my starting point is 32% cash. But yeah, guys, I think that's it for the week, and I appreciate you guys tuning in. If you have any questions, feel free to drop them in the comment section, shoot me a message on Twitter, or on the newsletter. And yeah, guys, have a great week. Appreciate it.